Hi, I'm Stacey Burke from Stacey Burke Trading. Today we're going to be talking about whether or not Forex trading is a scam. Stay tuned, I'll be right back. Hi, I'm Stacey Burke from Stacey Burke Trading. Today we're going to be talking about the misconception that Forex trading is a scam. I'm going to put it out there that that's completely incorrect and false, and we're going to go through a couple of things to sort of reiterate why that's so. And if anything, it's the opposite. It's the one pure market. It's the largest traded market on the planet, the most liquid, and if anything, it's the purest trading market for traders. And if you're not able to be consistent or successful in this market, chances are you probably need to reassess your methodology for Forex, or generally speaking, your strategies are not appropriate for Forex. So go back, assess your methodology. Now, the reason why Forex is such a pure market is that the vast number of orders that get filled during the day are immense. $3 to $5 trillion. It's larger than many markets combined. And this idea that banks and other institutions and hedge funds are hunting stops, running stop losses, stop orders on either side of the buying and selling is hugely incorrect. It's actually how an efficient market actually works, filling orders from side to side. And these large hedge funds and institutions have large orders every single day, huge numbers that need to be filled for clients, and they're working to fill them at the best prices. And they in order to do this efficiently and to get the best fills for themselves, they may have computer systems, algorithmic systems, discretionary traders, but these firms rely on getting the best prices after already having entered into fixed agreements with clients. So this misconception that they run stops, or during low volume times they're moving markets and manipulating them. I'll suggest this: the shorter the time frame, the higher the likelihood that yes, markets can be moved or manipulated by large traders, and spreads can be manipulated by brokers. But generally speaking, the longer the time frame and the high volume liquidity time frames, market opens, etc., the less likely that any one particular institution, hedge fund, bank, country, reserve bank, or any of those can manipulate the market. And if they can, it's for a very short time frame that it can be done for, as evidenced by the Bank of Japan on several occasions with the Japanese yen. So this idea, this illusion that you're being scammed, manipulated, the brokers are scamming you, the banks are running your stops, you need to stop and go back to basics and continue your studying and your learning. A lot of people wonder who's buying when the markets are shooting straight up, or selling when they're going way down, and who's doing this? And often the answers are simple. The institutions are always trying to fill all their orders at the best possible prices, and they'll buy in many pieces as the market continues to move up or down, and selling when it's going down, buying when it's going up. And a lot of this trading is done by computers and institutional programs. Once the buying and selling is complete, the volume may thin out, the market may go quiet, it may go sideways once these orders are done being filled, until possibly new order flow comes into the market. And in these quieter times, maybe they can be manipulated and moved. But if you go to other markets, shares, futures, those are markets, the smaller they get, the higher the likelihood that they can be moved by large traders, institutions, banks, etc., because there's less liquidity of those instruments being traded, and they have the ability to move markets in one direction or the other a lot easier than in the Forex market. So, you have to understand where you're placing your stops. There are other orders there that are also not closing positions, but entering new positions, and that's where the market will often gain speed, is where there are these multiple higher levels of orders. So the market's always seeking volume, and if the market is seeking orders to buy or sell, and that's where the volume is, that's where the market will move to, because it will always be moving towards more volume in order to find equilibrium. So as you're exiting, someone else may be entering. Should you be concerned that you're being hunted or manipulated or scammed? No, but I'd suggest that you know your broker, you know your instrument, you know your spreads, you know what happens around news announcements, you know what happens based on your time frame. These institutions have the smartest traders in the world. They know all the tricks in the book, even intuitively. And markets unfold the way they do on charts is because in an efficient market, countless traders are placing countless orders for thousands of different reasons, but controlling volume, moving back and forth by larger position traders, institutions, banks, etc. That's what the markets look like. And I can put up any chart on any time frame from any instrument and show you that they're all similar. So you need to really know your instrument, you need to know your market, you need to know your time frame, you need to know your broker. You need to know the ins and outs of everything, and there's no more manipulation on Forex or any other market. Perhaps you're with the wrong broker, perhaps you're trading the wrong instrument, perhaps you're not paying attention to news releases, but you need to go back, research all this, get better, stay focused, stay disciplined. But you need to know that you need to continuously keep learning, getting better, improving, because Forex is not a scam. It is the best efficient market for traders that there is. And as I said, know everything that you can. Your strategy might not be where it needs to be. Your time frame might not be appropriate for how you want to trade. Maybe you're not structured enough. Maybe psychologically you need to do more work. Yes, indeed, Forex can be traded. It can be traded profitably. If you haven't done so, go get my 7-step daily routine for high-performance traders. This is developed to help you develop discipline, confidence, winning mindset, forge resiliency and mental toughness, constant improvement, accelerated learning, 30-day goals, creating a vision, all the things that will help you continuously improve. Hopefully this video helped today, traders. Stay focused, stay disciplined, take responsibility for all your trading, good and bad. I never said it was easy, but I did say it was worth it. Have a great day, traders, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.